Welcome to this tutorial. In this video, I'll be sharing with you on how to prepare the income statement or the statement of profit or loss given the trial balance. Okay, this video is suitable for those who are doing finance for managers and also beginners in accounting. Let's go to the question. All right. So you can see what I'm sharing on the screen. Let me widen it up. Okay, so this is basically just a trial balance. A trial balance is a list of balances. It's a list of balances at the end of the accounting period. So this is the trial balance for Doggie Limited as at 31st December 2021. And then after the trial balance, we are given additional information that we should take into account to help us prepare what the examiner is asking for. And then from there, we can see what the examiner is asking for. There is a required here. Required, prepare the statement of profit or loss for the year ended 31st December 2021. Prepare the statement of profit or loss for the year ended 31st December 2021. And this example, I've obtained it from one of the questions from the University of Zambia. So to begin with, what's the income statement? The income statement is a statement, or the income statement is a statement which can be referred to as profit or loss, or sometimes it can be referred to as statement of income and other comprehensive income. All right. So whenever you hear profit or loss or income statement, they are just one and the same. And then this statement records the financial performance of the business and indicates either the business made a loss or a profit in a particular or in a given year. All right. So now I'll begin by indicating that the statement of profit or loss has got a format, and this format is standardized because we follow the accounting standards. And according to International Accounting Standards 1, which is presentation of statements, the income statement should have the following format. It should have revenue. Revenue sometimes is known as turnover. Turnover or simply sales, as the case could be, or simply sales. So whenever you see sales, turnover or revenue, they just mean one and the same thing. All right. And then after revenue, there is cost of goods sold. The cost of goods sold is the cost of the goods that we have sold. How much did the goods which we have sold costed us? And then we have gross profit. Gross profit is given by saying revenue minus cost of goods. And then from gross profit, we're going to remove two important expenses, which are distribution cost and administrative expenses, to get what is known as profit before interest and tax. And then we shall remove the interest expense for the year to arrive at what is known as profit before tax. And then we'll remove the tax expense for the year to finally arrive at the profit or the loss for the year. All right. Now, just to give a quick background, in the income statement, though we might have the trial balance, in the income statement, what goes in the income statement is only expenses and income. Expenses and income. Things like assets, liabilities, and capital, they do not go in the income statement. They are balance sheet item, or they are items which are indicated in the statement of financial position. So for now, I'm going to quickly identify what is income in the trial balance and what are expenses, and then I'll do the weightings and then charge them to the income statement or the statement of profit or loss. Statement of profit or loss. So for now, let's start with the first item in the trial balance for Doggie. The first item is turnover. Turnover is income. Remember, I say turnover is as good as sales or revenue. I'm indicating those that will go in the income statement in yellow. So those things that will go in the profit or loss in yellow, so that there is no confusion. That one is an expense. Purchases. Purchases is a special expense, which is the expense for buying goods for resale. So it will go in the profit or loss statement. Distribution and inventory. Inventory, this is beginning inventory. The beginning inventory will help us to calculate the cost of goods sold. I will explain. So it will be part of the income statement, though it's an asset, but it will be part of the income statement because it helps us to calculate the cost of goods sold. Distribution cost. These are expenses. Administrative cost. These are expenses. Return inwards. It's not an expense, but it affects the sales. Return inwards is when the customer is returning the goods that we had sold. It's a return inwards, meaning it's coming inside, meaning we are taking it outside, meaning we had sold some goods. Maybe the goods were bad, or maybe we oversold, or we oversupplied what the customer required. Therefore, the customer had to return some. So this one reduces the sales, or reduces turnover, or reduces revenue. So it will be part of the profit or loss statement. Receivables, these are people who owe us, and these are assets. They will not come into the income statement or the statement of profit or loss. Payables, these are liabilities. These are people that we owe, that we need to pay. Their liabilities, they do not come there. Return outwards. We are returning outwards. It will be part of the profit or loss statement. Why? Return outwards, we are taking back what we had bought. Maybe they oversupplied us or something like that. So it will affect the purchases here. It will come and affect the purchases. It will reduce the purchases. We had purchased, but we were oversupplied. So we are returning back, or we had purchased, but they give us wrong things, or they give us things which had defects. They were not fit for use, so we had to return them back. Okay? Carriage inwards. This is the expense. It's the transportation of the goods into the business. Cash at bank. This is not the expense. It's an asset. So it will not come in the statement of profit or loss. Carriage outwards. This is an expense. It's the transportation of the goods, most likely to the customers. Ordinary shares, these are part of capital. They are not coming into the profit or loss statement for the year. Irredeemable preference shares, these are shares as well. They're not coming in. Loan notes, loans are liabilities. Also, these ones will not come in. They are not expenses. Non-current assets, these are not expenses, they are assets. Accumulated depreciation, as at 1st January. As at 1st January, accumulated depreciation. As at 1st January 2021, 130. So that's accumulated depreciation. It does not come in our profit or loss statement, but we'll use it to calculate the depreciation for this year. Depreciation is an expense, but we only account for depreciation just for that particular year. Accumulated profits, 1st January 2021, those are not expenses or income, they are income for the previous period. They are not going to come in for now. Loan interest, this is an expense from borrowing. We shall establish it well as we'll be calculating. Preference share dividend, these are dividends. They will come in later when we start doing the profit appropriation. Ordinary shares, they are not expenses, but though they affect our profit, so we shall consider them at a later stage. But for now, as we look at, let me put these two in green because they're a special kind. We'll come and treat them as we do the profit appropriation. So for now, we can now start solving for the statement of profit or loss for the year ended 31st December 2021. So we've seen the format there. So I'll begin with calculating the things which are in this format. So meaning I need to calculate for revenue or turnover, though it has already been given, it has an adjustment. So I'm starting with revenue there. Let me calculate for revenue. So you see, and then I'll bring it there. But the income statement or the statement of profit or loss has the heading, and the heading has got marks. So I shall say solution here. Solution, and then the name of the company is Doggie Limited. And then statement of profit or loss, I can simply copy this. And put it here. So that heading calls for marks. So you need to do that. It's for the year ended 31st December 2021. So let's see. What was our turnover or sales in the trial balance? The turnover is here. It is 700, which is 700,000. There are those K's on top there. So it's 700. So turnover is 700 there. So I've written 700,000. But we had retained inwards, meaning the customer retained some of the stuff that we sold them. So this will reduce our sales. Okay, this will reduce our sales. So I've said 700, then over there minus retain inwards. So I'm looking for return inwards. I've already marked it, I guess. Return inwards is here. It was 5. So return inwards was 5,000, meaning our sales is 695,000, or our turnover is 695,000. So where there's turnover here, I'll come and put 695. Okay. How do I indicate the case here? Or else I'll be forced to do the thousands. Okay, let me go with the thousands. Okay. But however, I still need to indicate the K. However, I still need to indicate the K here. There I have an opportunity, then I can simply do this and remove the thousands here and leave it like that. So 695. So I'm done with the revenue. I come to cost of goods sold. Cost of goods sold has got a formula. How do we calculate cost of goods sold? I shall call it working 3, cost of goods sold. Cost of goods sold has a formula. The formula for cost of goods sold is opening inventory. Let me put a table here. A 2 columns table, maybe going up to way here. Yes. Cost of goods sold has a formula and it's calculated as opening inventory, which is opening stock. Okay. Where the opening inventory, they are there in the trial balance. What was our opening inventory? 70, as you can see here. 70. So opening inventory, I'll bring here. I'm on the workings. Opening inventory, I'll bring here 70. And then plus purchases. Plus purchases. Purchases, I'll bring here. Purchases, where the purchases? The purchases is 300. Okay, so we have opening inventory plus purchases. Now on purchases, I'll pause a little bit. There are things that affect purchases, just like there are things that affect sales, like return inwards. Return outwards affect purchases. And I saw return outwards in the trial balance. Return outwards, we return the goods that we purchase, so our purchases are going to reduce. The purchases value will reduce. So what was the return outwards? When you see me indicating brackets, I simply indicate that we are lessing. So return outwards in the trial balance was 3 PATs, return outwards. I had marked it as one of the items that is coming in the income statement. I use the word profit or loss or income statements anonymously, so they mean the same. Return outwards. And then the other thing that will affect purchases is carriage inwards. The carrying of the goods into the business is part of the purchases of those goods. If you sell calculators and you want to order a calculator and the order cost of the calculator, one calculator costs you say maybe 50 kwacha, and to transport that calculator to bring it in Zambia, they charge you an extra 10 kwacha, meaning the cost of the calculator is not 50 kwacha but 60 kwacha. So carriage inwards is part of the purchases. I saw carriage inwards is the transportation cost of the goods into the business. I saw carriage inwards in the trial balance. Yes, here it is. 10. So we are adding it to purchases. So these three, though they've been indicated here, they are part of the purchases item because they affect the purchases. No, those two I mean. The return outwards will reduce the purchases, and carriage inwards will increase the purchases. Return outwards, we are just returning the goods that we had bought. Carriage inwards is just the transportation of the goods into the business. And then finally, we can say less closing inventory. Closing inventory. Closing inventory is usually given in the additional information. And here it was not 5. There you go. Closing inventory. There, not 5. 45,000. So I'm bringing less closing inventory here. 45. So now I can calculate my cost of goods sold. I can calculate my cost of goods sold. Cost of goods sold, there we are. Opening inventory 70 plus purchases 300 minus return outward, which reduces the purchases 3 plus carriage inward, which increases the cost of the purchases 10 minus closing inventory, which is 45. And then I have 332. Is this the final answer for cost of goods sold? Maybe yes, maybe no. We need to check the notes to see if there is any note which is requiring us to put something on the cost of goods sold. The first note, depreciation was charged on non-current assets, and depreciation is charged to administrative expense. So it has nothing to do with cost of sales. The second note is talking about tax. It has nothing to do with the cost of goods sold. Rent paid in advance amounting to that was charged to administrative cost. You see, so the examiner would indicate sometimes to say depreciation will be charged to cost of sales, meaning you need to add it to cost of sales. Okay, there is an outstanding transport amount charged to distribution cost. It has nothing to do with the cost of sales. Closing inventory, we've already indicated. So now this confirms that actually our cost of goods sold is 332. So now I'm bringing 332 here. Gross profit, we are simply saying 695 minus 332. We have 363 as our gross profit. Distribution cost and administrative cost. Let's read the notes to see if there is anything which is affecting distribution cost and administrative cost. The depreciation was charged on reducing on non-current assets at a rate of 20%. On reducing balance basis, depreciation is charged to administrative expense. So therefore, I need first to calculate the depreciation before I can bring the administrative expenses into the statement of profit or loss. So there you go. I'd actually indicated to say depreciation should be the first working, because depreciation sometimes affects cost of sales, distribution cost, or administrative cost. So let me insert a table here as well to make life easy for us. Okay. So depreciation will have the cost of non-current assets. What was the original cost before it depreciated? Non-current asset at cost. What was the cost of the non-current asset? So the non-current asset at cost was 360. It's an asset. I'm not saying it's going into the income statement or the statement of profit or loss. It's an asset. It will go in the statement of financial position or balance. But I'm using it to calculate this year's depreciation. Depreciation is an expense. So it was 360. So I'm bringing the 360 here. And then I need to remove accumulated depreciation, meaning the depreciation that has been happening from the time the asset was bought. By how much has it lost value? So accumulated depreciation as at 1st January was that, 130. $130 there. Oh, accumulated depreciation, dip. So 360 minus 130, I have 230. 230 is the book value of the asset at the beginning of the year. Book value at 1st January. 1st January when 2021. So this asset has to be depreciated further now. Let me insert below something. This asset has to be depreciated further now for this year. So depreciation for this year, according to the note, they are saying it's 20% on reducing balance basis. 20% on reducing balance basis. So we are going to do 20% of the reduced balance. So we'll say 20%, 20%, 0.2 or 20, okay. Let me just say 20%. 20% of the reduced balance. The reduced balance is this one. After we've removed accumulated depreciation, which is the 230. 230 there. What do we have? 46. So the depreciation charge for this year is 46. And the depreciation charge reduces the value of the asset. So the book value of the asset now has at 31st December 2021, 230 minus 46 will give us 184. That's the book value of the asset. I was very much more interested in the depreciation charge for the year, which is the 46. I need it because the examiner has indicated that depreciation charge will be charged to administrative expenses. So I'll go to administrative expense. So yeah, let me start with administrative expense. There is no harm. Administrative expense is 110 here. Let me start working it out. I can work it out here. I can work it out here. Administrative expense as a working. So what was the administrative expense as per trial balance? As per trial balance, the administrative expense was indicating 110, if I'm not mistaken. Yes, here it is, 110. So administrative expense is 110. And then to this administrative expense, we are charging what? Depreciation, which we calculated, the 46. This depreciation, which we are calculating here, the 46. Why are we doing that? Because of the additional information. Depreciation is charged to administrative expenses. $46 here. What else is affecting administrative expenses in the notes? Let's read. Tax is an expense on its own. Rent paid in advance amounting to 6,000 was charged to administrative expenses. So an amount paid in advance, meaning if we are preparing the statement for 2021, it simply means that this amount was paid for 2022, but we are not preparing the statement for 2022. So this amount, this one, the rent, not free, which was paid in advance. This amount is supposed to be removed from the administrative expenses because it does not relate to this period. It was paid in advance, meaning it was paid for 2021 or 2022, but we are preparing the statement for 2021. So it should be excluded from our calculation because it does not relate to the period under review, which is 2021. So I'll remove the 6 from administrative expense. Rent prepaid. Since I'm removing, I'll put it in brackets. Anything which will affect administrative expenses. There is an outstanding amount for transport amounting to 5. No. Transport to affect cost of distribution cost. Closing inventory 45. We've already dealt with closing inventory. Remember when we were calculating cost of sales? So that is it. So I can close for administrative expenses from here. So we have 110 plus 46 minus 6. So the administrative expense is 150. So administrative expense, where are you? In the format for the statement of profit or loss for the year. Administrative is here. So I'm putting the 150, which I've just calculated there. We have distribution cost. Distribution cost, we are supposed to also calculate. There is an adjustment for distribution cost in the note. So I'm also putting the table for distribution cost as a working. What is the distribution cost as PTB, per trial balance? What is the distribution cost as per trial balance? Let's see in the trial balance. This is the trial balance which we were given. Distribution cost is 80,000. Distribution cost is 80,000. So I'll bring the 80 here. As per trial balance. There is an outstanding balance or an outstanding amount of transport amounting to 5,000, and this is charged to distribution cost. So we're going to take this to distribution cost. We did not pay, but it relates to this year. We've used for this year, but we did not pay. So we'll add it here as the outstanding balance or accrual. Accrued expense. 5. And also the other expense which comes to here is the carriage outwards. Remember, the carriage inwards was charged to purchases. The carriage outwards is regarded as an expense, and it's here. 2. Carriage outward. It's an expense. It's a distribution expense. Carrying the goods outside the business. Selling and distribution. Carriage outward. 2 there. So I have 80 plus 585 plus 287, and then I can say this is my distribution cost. $87. So under distribution cost, I'll put 87 there. $363, which is the gross profit minus, I'm starting from here, gross profit, to remove those things to have profit before interest and tax. So 363 minus 87 minus 150. I have 126 as my profit before interest and tax. 126 as my profit before interest and tax. Interest expense for the year, I need to check the loan because interest is charged on the loan. I need to check the loan and see the percentage that we are hammering on that particular loan. There is a loan in the trial balance. There is a loan in the trial balance. 10% loan notes here. Which is the outstanding balance for the loan is 80. So what is 10% of 80? It's 8. So my interest expense for the year is 8,000, which is actually agreeing with the loan note interest which you are seeing here. So I'll take it to the income statement or the statement of profit or loss. 8 here. We are less than 8. So we'll say 126 minus 8. We have 118. 118 is the profit before tax. So we need to do the tax for the year. Tax for the year, there is a note here which says tax for the year is 30%. So when we say tax for the year is 30%, it's the 30% of the profit before tax. So it's 30% of the 118. So tax for the year is 30% of 118. You see, can I stretch this better? Yeah. Yes. So what is 30% of 118? It's 35.4. 35.4 is the tax for the year. And then finally, we can now have the profit for the year, which is now profit before tax, which is this one, the 118 minus the tax itself. So 118 minus tax, which is 35.4. I have 82.6. I have 82.6 as the profit for the year. 82.6 as the profit for the year. So what I was just responding to is the prepare the statement of profit or loss for the year ended 31st December 2021. And this is it. This is the profit, the statement, this is Doggie Limited statement of profit or loss for the year ended 31st December. All these other things which are following here, they are just workings, and they are necessary for you to indicate in your exam, so that the examiner knows where you are getting things. So this is the profit for the year. I have adequately responded to the question required by the examiner. Thank you for joining me in this tutorial. For more videos, don't forget to subscribe to this channel.